Hey everybody, this is Crystal, and I'm going to talk to you today about setting up your budget using an Excel spreadsheet. When I create my budget, I use two different methods. I use the 1st through the 15th and the 15th through the 31st, which is a paycheck to paycheck method that I learned while in college from Apostle Amos Howard, which was my pastor at the time. And I also use zero-based budgeting, which is a concept that I learned from Dave Ramsey. When my husband and I first got married over 17 years ago, we read the Financial Peace book, and that was a concept that we learned in that book. We were able to pay off $25,000 worth of debt in about 18 months, making only about $40,000 combined. So we were not hardly making any money at that time, but we buckled down, we disciplined ourselves, and we paid off all of the debts in all of the debts that we had at that time. And we really do believe that that created just a freedom for us over the years that we really just want to share with you. And so I talk a lot about budgeting and savings, and my husband talks a lot about credit repair, and building business credit. And so we'll both talk to you about those things and kind of see where it goes. But one of the things, the main thing I'm going to show you today is how we set up our budget using Excel spreadsheet. So what you need to start out with is, let me share my screen here. What you need to start out with to create a budget in Excel is your take-home pay, number one, and then your expenses. So a lot of people do not know what their expenses are on a month-to-month basis. There's a couple of ways you can do that. You can estimate that and kind of see what they are, or you can go straight to your bank account and get an idea of how much you've spent over time on certain items. And we always tell you to itemize everything. We don't use miscellaneous in our budget. We itemize everything. So there's food, gas, entertainment, house notes, if you pay tithes, everything is itemized in your budget, in this budget. The last thing you need is a little bit of time and discipline. I'm telling you, if you take the time to balance your budget every month or every week and then use the discipline that you need to be able to stick with it, I promise you it will change your life. It is life changing. So how do you set up a budget in Excel? I'm going to go to this Excel spreadsheet. The first thing you do is you put in, this is just a simple Excel spreadsheet, nothing fancy about this spreadsheet, let me tell you. You want to just track your income and track your expenses from month to month. That's it. You also want to be able to track all of your debts and how you're going to pay those debts off. Okay. And so the first thing that we're looking at here is we're looking at all the income that this family brings in. So you'll see income A and then income B. Income A is really person A. They bring in $500 every 2 weeks, and then income B brings in $1,100 every 2 weeks. I'm sorry. Income A brings in $500 every week, and then income B brings in $1,100 every 2 weeks. Okay, so how do they spend their money? The first thing that they do is that they pay tithes, and then you'll see over here how that amount is negative. There's a negative $250, and then there's a positive $500 on this side. You see that we're using the accounting tool, so we just click on the money. When you create these negatives, you click on the money sign here, and then what it does is it makes it a negative $250. It puts the accounting parentheses around it, meaning that it is negative. Okay, over here to the right, you'll see all of these numbers are positive. And so you'll see they have income, and then they also have expenses. So they have their house note is $700, gas $150, food and household items, because a lot of times we buy our food and our household items at the same time at the grocery store, um, Target, Walmart, Walgreens, all those places, Kroger. We buy food and household items. I put those together, $250 for the first 2 weeks of the month. So what we're doing is we're splitting this into 2 weeks at a time, okay? Then you have utility bill. You might have life insurance, $25 a month. Eating out, $200 a month. Haircuts, $20 a month. And then the big expense, which for a lot of us is daycare, $420 a month. Now what you'll notice is that this balance here is the sum of all of their income and then all of their expenses, okay? You have $115 that you are over. So what I tell people is that you never, ever, ever want this number to be negative, because what that's doing is saying you don't have enough money really to make it to the second half of the month. So what you want to do is you want to figure out a way. This number should never be negative. You're going to try to move something, move a bill, if you can, down to the second half of the month. I've seen it happen. I've had clients that have made that happen, okay? And so it is possible. What you can easily do is maybe call your utility company, call someone and say, hey, I need to change the date, my due date for a particular bill, okay? And so what happens here is that we move that down, the utilities down to the second half of the month, and then you have an $85 overage so that you can be prepared for the second half of the month, okay? And then the income, the expenses are mostly all the same. You'll see that they pay, this couple pays tithes, they pay for gas, food and household items, eating out. Let me change this to tithes. Giving, food and household items, eating out, their cell phone bill, maybe cable, auto insurance, utilities. We move that down to the bottom. Haircuts, hair for girls, daycare, $420, and then they have a couple of debts that they pay. One credit card one is $35, credit card two, $75, and then they had $125 left over. Now we follow the Dave Ramsey baby steps, and his very first baby step is that you build you a $1,000 emergency fund. And so any money that is left over, let's say we took this out, any money that is left over. So for this particular budget, they have $125 left over. So what we do is we take, because we're doing what we call a zero-based budget, which means that you spend every dime on paper, even your emergency fund. What you want to do is you want to put your emergency fund in this budget, because you're on step one. You want to put your emergency fund in this budget, and you want to get your budget down to zero, okay? And so this is, what is a zero-based budget? It's getting your budget all the way down to where you are literally at a zero, okay? That includes entertainment, that includes eating out, that includes emergency fund. Now, what do you do with that $125? I'm going to name this zero-based budget. What do you do with that $125? If you're following the Dave Ramsey 7 steps, baby step number one is save $1,000. Baby step number two is get out of debt. So what I typically teach people is you make your goals. I always call this like a goal. You can call this financial goals. You can call this debt reduction. I typically call it financial goals. So your first goal is emergency fund, $1,000, okay? And so what I've done is I've taken the $125. I think I had 150 at first. $125 divided by $1,000 divided by $125. It takes you 8 months to get your $1,000, okay? So credit card one, you're paying $35 on, okay? So you have 125 plus 35 will get you $160. So you take 300 divided by 160 will get you almost 2 months to be able to pay the $300 off. So think about it. If this is what Dave Ramsey calls the debt snowball. Okay. So first you do your emergency fund, and then all your debts, what you do is you take them from the lowest to the highest. And that is what is called a debt snowball. So the debt snowball in action is basically you taking your minimum payment for your first bill, you adding it to whatever you have left over, and then you take that money that you were spending and then apply it to the next bill. Okay, so you apply it to your next bill. So if you were paying $550 on this medical bill, a minimum payment of $500, Once you pay that off, you take that $550, you add it to the $63 that you were already paying on the second credit card, and then you have $613 that you're paying on this $2,500. So you're rolling whatever your balance is or whatever your payment is to the next item, okay? And so in this case, we had $125 left. We take that $125, we add it to the 35 that we're already paying. So we take the $300 divided by 160, and then you have almost 2 months to pay that off. Okay, so then on this one, I believe on credit card number 2, you're paying $75. So we have $60 plus $35. Now you have additional you have $235 left that you can pay on this $600. Okay, so that gives you a little bit over 2 months. So let's say you haven't been paying your student loans, okay? Your student loans are in deferment. And you have this $235 left. You roll that over to your student loans. That takes you about 42 months to be able to pay off, okay? And so this is 54 months, almost 55 months to pay things off. That's a little bit right at 4.5 years. Now, what are some ways that you can say, hey, I don't want to wait 4.5 years to pay off all my debts and to get to my goals? So what do you have to do? You have to increase your income. And what are ways to increase your income? Number one, spend less. Or number two, make more money. Those are your two options, okay? And so recently I've done some couponing where I've saved almost $400 a month on groceries just couponing alone. There's a ton of video footage out there to show you how to coupon and how to save money or even make money through couponing, okay? Another option, my husband and I, when we first started our debt-free journey, I hate to say this, but we let go of our cell phones and we drove one car for a while. We did not use cable. We took ourselves off of cable. We did not eat out hardly ever besides to celebrate when we paid something off. And so it depends on how hard you want to go, will determine how fast you can get to your goals. So if you say, 4.5 years is too long for me, I'll live without this one thing for the next 2 years so I can pay my debt off, then go for it. Or you can say, hey, I'm going to discipline myself, sit down, spend some time, learn how to coupon so that I can save money in this area. Or we're going to eat out only once a week as a family. So whatever it is that you need to do to be able to spend less money and you have more money to go to your debt snowball, do that. The other thing is to make more money. There are lots of opportunities and ways and side hustles where you can make a little bit more money and you can take that money. Anytime my husband and I get some kind of lump sum from some side job we've taken, what we do is we take that money and we add it to whatever goal that we're on for Dave Ramsey. And so it could be the third baby step is saving 3 to 6 months worth of income so that you're prepared for any type of major emergency that could potentially come up. Okay, and so why do you need to save that amount of money, or why do you even need to save the $1,000? What it does is it keeps you from depending on credit cards or even family members being having to pay certain things back. It keeps you from going into debt. So you're always going to have those tiny emergencies. Maybe your tire goes out or your child needs something extra for school. So what you want to do is you want to have that money set aside, the $1,000 for those tiny emergencies. And then 3 to 6 months is if you have a layoff or something major, a catastrophe happens. Right now, we're in the middle of a pandemic. And so if you have that 3 to 6 months worth of savings, it gives you an opportunity to a little bit of time to be able to regroup, recoup, and finding something new or something different. So that is what the savings is all about and the debt reduction. This is how I use Excel spreadsheets to do what we've done more than once. We paid off our debts and honestly, we've gotten back into debt, but we paid them off again. And so it works. It's a method that works. It's an easy tool. I'll attach this actual form down below in the comment section, and you can use it. So thank you so much for watching.